Welcome to this week's live session with us here at Price Action and Income. All right, if you're new to this channel, thanks for joining us. Please hit the subscribe button. If there's any comments you guys want to leave, please do that below the section or below the video in the comment section. And don't forget to hit the like and subscribe button to be notified next time when we release another video. All right, so before we get started, we try to do these sessions once every week, normally on a Wednesday. If not, something happens, life happens, we'll do them on a Thursday. And they generally go on for like half an hour, depending on how active you guys are. So once I've done the analysis and what I want to show you guys from my side, then I'll hand it over to you. You can ask me any questions that you might have. Maybe you want me to have a look at some of your markets using market geometry. So please, if you do have any questions, I have Nathan manning the chat box. So please go ahead and drop any questions you might have in there. All right, so before we get started, just note that everything I'm showing here today reflects my own opinions and my own analysis and does not constitute any trading advice. All right, that being said, I'm going to do things a little bit other way around. We've had a member that sent a question to support. I don't think he can make today's live session, so you'll probably watch the recording afterwards. His name's Dale. He asked me to have a look at QQQ, which is the ETF that tracks the NASDAQ. And once I'm done with that, I've had a lot of people asking me to have a look at Bitcoin, especially in the comment section. Also had a member that wrote in, Sashin is his name, that asked me to have a look at Bitcoin, which is so happens I've done quite a lot of work on Bitcoin over the past few weeks, as well as, if you can remember last week's session, I talked a little bit about time cycles and the timing element that I've been working on with trading. And I'm going to be showing you some really cool stuff. We are planning to release a cycle newsletter towards the end of this month or first week of October. So it'll be a new subscription that we're going to launch. And I'm really going to start delving into the timing aspects of trading, which is something that's really lacking in the arsenal of most traders. And obviously, using a cycle analysis with my market geometry, they just make really good partners, or very good, how can I say, techniques that actually gel together with each other extremely well. All right, without further ado, let's have a look at QQQ. Before I look at QQQ, like I mentioned, this is the ETF that follows the NASDAQ. Now, I quite like looking at the Dow Jones Index. I've looked at that in previous videos that I've done, previous sessions. If I just compare what the Dow Jones has done with the QQQ, you can very clearly see that they follow similar paths. Same with the ES as well. All right. So Dale, just before we look at QQQ, I do not have data going back as far as I do for, this is now set to a weekly scale, going back as far as I do for the Dow Jones. It only goes back to March 1999. So I will just do a analysis on this current bull cycle that we have on here, but just quickly want to remind you what we're seeing on Dow Jones Index. Now, I've set this to a weekly as well. If you want to have a better clue of what I've been thinking about this massive bull run, then please go watch that previous video. I've set this to the log scale on the Dow Jones Industrial Average. This low after the housing collapse that we had, it ended in February, March 2009. I'm counting this as obviously a massive bullish phase. Then between here in January and March 2018 until March 2020, we had a clear expanding triangle. This is what I would call, for this bullish phase starting in 2009, my third wave high. Fourth wave completion being an expanding triangle, and then price running up into potentially a top that might not be over yet. You've probably all been watching the news and been following this thing with what's it, Evergreen, what's it called, and the defaults that are happening over there out of China. Evergrande, sorry. Evergreen was a ship stuck in the Suez Canal. Anyway, I'm viewing this cycle that started in March 2020 as a potential last fifth wave to the upside, obviously from a 2009 low. Now, we've had a considerable decline in the major US indices. There are a lot of people crawling out of the woodworks at the moment, saying that, you know, a yearly top is in already. And this might be the high for this year. Well, they might be right, but to be dead honest with you, they probably said it over here. This little decline we had over here, and putting everything in perspective, it's not major yet, in my opinion. I still think that we might still be dealing with a third wave that's incomplete, but how we get there, obviously anyone's guess. We could have seen a high for this year, but my expectations are that we could still head higher until around the end of this year, November, December, come down in a fourth wave. Let me just label that properly. And then go into a fifth wave towards next year and then see a major decline. Might be wrong, might not be wrong, but just looking at the pitchforks that I've drawn, this recent high did not reach the upper median line, again set to a log scale. We've done this because of this massive bull run. If you see, I go to the outer scale and I use a pitchfork using this 1, 2 that I labeled there, 3, 4, 5, and setting this as my first anchor point, start 2009 to this high in May 2011 to this low in October 2011. It's absolutely useless to use outer scale. So we go to log. You can clearly see that price has been respecting this pitchfork extremely well. And that brings me back to triple Q. Since I don't have data going back all the way to 2009, if I look at this bull run, the same one that started in March, obviously there's a bull run before that, but I'm seeing them as different phases. So corrective phase, bullish phase, and this bullish phase, using the 3 most prominent swing points prior to this move to the upside, including this actual low here. And you can see that this pitchfork, as a standard pitchfork, worked pretty well, but price has left the boundaries of that. So if I Control C, Control V, or copy and paste, whatever you want to call it, this to the upside, then price has not reached this upper line yet. So working with the Dow Jones Industrial Average as my market barometer, I think that we are not done going up yet. Might be wrong. I would need to see a very serious collapse, probably below the center median line, around about 32,000 level. And if price does break this, we are labeled the number 1 at around about 29,000, close to 30,000 level, then I would say a bear market has started. So whatever happens in between here, anyone's guess, but I don't think we're done going up. Right. Then we have a question from Richard Charles. Or is it just Charles? Can Richard look at XAG/USD? I can definitely do that. Before I do that, let me do the updates first. Let's do things a little bit in reverse this week. I see we've got more questions coming in, which is great, guys. Keep them coming. Do another update on gold and also XAG/USD. Let's quickly have a look at those two. Silver. Let's open up a chart there. Let's go back to the daily. Guys, for the longest time, I've thought that silver was likely forming a AB. Where was this? A, B, C, D, E. But, and it might still do that, i.e. a sort of an ugly looking symmetrical triangle. It's almost starting to look like a descending triangle, in my opinion. Price continuously finding support around these levels over here. We're right there again. So, question is, do we have a descending triangle? If we do, then that could be bearish, in my opinion. One thing to watch out here, Charles, if you look at the low of this sort of area, if we break the 2167 level, I think we can see a pretty strong decline. Just because of the fact that we found support 1, 2, 3, 4 times. In my opinion, when you see price hit sort of levels, you can always have a double bottom. That's fine. A triple bottom, you know, that happens. You can get strong directional changes from there. But if price does this 4 times in a row, quite often you see a break if price does test those lows again. That being said, we could still be dealing with a sort of symmetrical triangle, but we're really at the sort of end of where this triangle should end. If this was an, oops, let me get rid of my magnet mode, A, B, potentially C, this will be a little bit flat for a D in my opinion. We might actually head up in a D and then a E. And then make it my path tool out. Oh, where's it gone? There. So A either here or there. Probably this. A, B, C, or C here. Maybe a D and an E and up. That being said, that is the bullish scenario. The bearish scenario is if we do break this low, then I think we have a descending triangle rather than an ascending triangle. Just one thing to take note of here is that I don't think if this is a triangle that we're done yet. And this also ties in what happened with gold, is that I'm thinking gold can still move lower. And I think we're dealing with a extremely complex long-term incomplete fourth wave correction in gold. And if gold and silver were to track each other just a little bit, obviously the price pattern it's different than gold. I'll look at gold in just a sec. Then I would expect that more frustration to come, guys. Not a markets I really want to be trading at the moment, to be dead honest with you. So that's my view on silver. Let's quickly have a look at gold. XOU USD. Provide you with an update there. I think I have it open on another screen. Let me just quickly have a look. Sorry guys. Here we go. I have so many tabs open, sometimes I really get lost. Right, let's do the same thing. Go to a day. Obviously, complete different price structure than the silver market. Just want to get rid of all this writing. It's actually a potential trade that I'm stalking at the moment. Alright, so since this high in gold, sorry for waiting that long, on 7th of August last year, price came down. Very overlapping fashion. Initially we thought we had an A, B, C, X, A, B, C. Price actually ended at the bottom of a channel. If I had it right, yep, where these lows came in. A lot of traders were thinking this was a WXY pattern or just an ABC, however you want to count it, and then prices moved back up again. This could very well have been some messy ABC. This could be an X, and now we're heading down again. I actually think we're dealing here with a triple zigzag, and I don't think we're done going down, in my opinion. Like I said with silver, it's not a market I really am keen on trading big swings on. And if I do want to trade this, I want to have a short-term trade approach here. That being said, price, in my opinion, has been respecting this shift pitchfork really well. There's reasons for that I drew it with my members. If you project some of these lines backward, you'll see that previous support and resistance areas came in at these lines. So I see this as the operating angle of this market. Let's go to 4 hour. Price has recently reached this low median line again. I just want to draw in another pitchfork, and I'll show you what I'm showing my members here as well at the moment. Whoops, come on. And I think I had a shift going there. Yeah. See, our price hit this low red warning on 2 occasions. We had a confluence of this long-term center median line and a shorter-term pitchfork sloping downwards. My favorite pitchfork to use when dealing with a correction. I'm assuming this is just some sort of ABC. What I'm not clear about though is that if we're going to make another low, we also watch very specific indicators, not our own indicators, but indicators that we recently started adding for our members that work really well at showing us whether we should get into trades or not. Now we actually followed 2 of those indicators, and one gave a really good signal at this low here, which we didn't trade. I'm actually expecting that we might make another move to the downside. I might be completely wrong. I might be too late on this trade, but we've, just from a quick technical perspective, we've hit these previous lows over here where support might now have returned into resistance. Break above this level with decent momentum, and I'm too late on this trade, and we'll probably see another move to the upside. That being said, I'll keep my expectations in check. Charles, who was it that wants to see the the gold market? Sorry if I forgot your name. I'll really keep my, how can I say, my targets very close by with very tight stop losses, because I think we're going to enter a very volatile period. Things have already spiked on the volatility side of things by just looking at the indices, for example, and also just trying to figure out what is happening with this entire pattern from that high from last year. I don't think we're done going down, but between here we're going to go up and down, up and down, up and down, and it's going to really, really frustrate a lot of traders, and I'm still sticking with that opinion. All right, so that's gold. Amit, it would be great to explain a little bit about insider candles. You mean candles that stuck within the inside of a range of the previous candle, or what that might be? Actually, we're going to hold a class next week, which you might be interested in, Amit. We're going to be talking about what we call a velocity trigger setup. It actually deals with a similar sort of thing you're asking here on insider candles, and I actually use them as trade setups. So just due to the limited time that we have today, Amit, I would really recommend that you try to attend next week's live training. We're probably going to go on for about 2 hours, something we're really, really looking forward to do probably once a month going ahead, and really give you some really cool techniques, in this case an entry technique using insider candles. Then we have a friend from South Africa, did not give a name, that's 100% fine, asked me to look at the pound US dollar. Let's bring it up. See all those lines, is not what I want to show you. Those work on sacred geometry, which is another course I'm working on if I ever get time to finish. Any case, let's quickly look at the pound US dollar. Guys, if I'm going off screen, it's because I normally have other charts open with directional biases. I've got 3 screens going on at the same time. You're just seeing one of my screens. Just want to see, I've recently done some work on the pound US dollar. You can see they already have market geometry going on there. Let's have a look. All right, so here's my thinking on the pound US dollar. If you watched my previous videos, I also looked at the dollar index. quite a lot of time to use or to, gauge what that is doing according to what the other currencies that trade against the dollar might be doing. And if you can remember from the previous videos, and I'll quickly just go over that, I think we are not done moving to the upside. I'm expecting we're still going to see a drop down and then a move towards the end of this year to complete what I still believe to be a correction that started here on the 6th of January. So I'm expecting interim weakness in the dollar index, but towards the end of the year, another move to the upside. Now, that's my expectations. Price has sort of followed it pretty well for the longest time. If the dollar is going to basically weaken a little bit now, and this all depends on obviously what's going to happen with the FMC minutes that's scheduled for later today. We have talked about when tapering is going to start. The Fed's going to talk about that. All these things might influence things over the near term. If the dollar, let's say, weakens, then gold's going to go up or reverse lower. It just really depends what they're going to say. But if I'm looking at projections, I'm more interested in this sort of time frame towards the end of this year when I believe the dollar index is going to top. And then see another move lower to basically complete this massive decline from last year March's high. Okay, so if you look at pound US dollar, we might see interim strength. We're almost making a triple bottom here again, but I don't think we're done going down on the pound US dollar. But really interesting here is we probably might even see a decline towards the center median line of this pitchfork using the three most prominent swings prior to this decline. But then again, guys, very messy. It's just I find this with a lot of the currencies these days. If you are lucky to get involved with these impulsive waves, then great. But if not, then, at the moment we're dealing with up and down, up and down, up and down. It's extremely volatile and non-directionless, in my opinion. So I think short term, this is what I've been telling some of my other traders as well, might see a bit of strength again. But we're probably looking at and following what the dollar index is doing, and probably going to see another further decline at a later stage, also towards the end of this year sort of window, maybe even October, November, before we might see another move to the upside. All right, we also have a no-name here. Mahmoud, I'm going to jump into the Bitcoin charts right now. I'm going to go a little bit over half an hour if you guys don't mind. So I've got some really cool stuff to show you over there. So don't forget about you, Mahmoud. I'm going to look at the Bitcoin US dollar tether chart soon. YLD USDT crypto. This from an anonymous person. This brings me back to working with charts that are still very young in basically their price structure and their development. I mean, I've only got data going back till the 14th of December, so they might have only started or launched last year. Made a high of 1.2, moved down lower again. When I trade anything on the altcoin markets, I tend to do my research properly. I want to know if there's any future sort of, worth in this coin, no, rather than just hype. So to perform market analysis on data, if I only have data with a very short lifespan, it is extremely difficult, and I'll be dead honest about that. Let's just see if I can fit a pitchfork differently. Yeah, you see, I'm not following this market, so I really do apologize if I don't know what's going on here, which is sometimes perfectly fine. This is not a market that I'm following. Yeah, so I'm really sorry. I really can't say too much about that, to be honest. Buwan, you're talking about shouldn't in a zigzag the correction, the A wave must be equal to the C wave. And the majority of cases, if you're dealing with single zigzags, then yes, that is the case. You do sometimes have extensions towards your 1.382 levels. If it gets anything above that, you probably already seen a trend reversal or dealing with an expanded flat. So yeah, quite often if you're dealing with picture perfect zigzags, then more than often your C wave will be equal to your A wave in length. Euro US dollar. That's from Jock Armand. Hopefully I'm pronouncing your names right, guys. And here I have the sacred geometry on again. Let's just go to a different chart. There we go. And this also ties again to what the pound US dollar is doing. What is my expectation of what the dollar index is doing? This pitchfork I've had on here for the longest period of time. And I'm still thinking that we are here also dealing with a very long extended C wave, i.e. an ABC. It could also be an ABCX. Now we made an A, now we're going to make a B and a C of the second one, giving us WXY, which is also a possibility. Which is why it's very important that I'm watching what the dollar index is doing and still thinking around that time frame end of this year where I believe the dollar index might top, i.e. pound US dollar, euro US dollar, making new lows. At the moment, I have this pitchfork. It is a modified pitchfork. It's worked extremely well as resistance over here. Resistance. It just missed this low median line over here. I've actually need to update this proposed support zone because price hasn't reached that yet. In the majority of cases, sometimes you'll see price miss these lines, and then you think, oh my goodness, you missed a trade. But then eventually, like this, for example, still tells me that this modified pitchfork is working extremely well. It acted as pinpoint resistance during this previous move to the upside, and now price has gone down to the downside again. So we're looking at an update area here of 1.1570 to 1.1630-ish. So that's something I need to update. If price doesn't make new lows, I'm still thinking this could be an ABCX, also an A, incomplete B, and then another C towards the end of this year, and then we see the euro US dollar move up again. Again, guys, a lot of guys think up we go and down we go. Similar situation. Price hasn't really gone anywhere. It's just gone up and down, up and down, up and down. Very frustrating times at the moment in most markets, I'll be dead honest. All right, Jocks. Yeah, the euro US dollar, like I said, ties into what I'm thinking on the dollar index. And if you continuously watch these videos until closer to those times when if the price follows what I anticipated might be doing, and it does do that, then we can obviously fine tune these proposed, let's say, buy zones, as I would call them, or update our price structure. I just don't think we're just ready to take longs just yet. Alright guys, and this brings me to Bitcoin. I want to be showing you guys something that I've been working on, and should I say that's been a passion for me since around about 2012, and that is cycle analysis. Now the topic of cycle analysis could be a lot of heebie-jeebies for a lot of people, or a topic that they find extremely confusing. And to be dead honest, if you just go do any sort of training on cycles, it could be a rabbit hole that you can go down through for many years, and it could cost a real arm and a leg. I've spent over, I don't know, close to $20,000 US over a 6-7 year period just trying to learn how to use cycles in the financial world. Now, before I dive into the cycles, I just want to mention that, you know, a lot of his cycle work come from guys like Hurst, which done cycle analysis, the famous one being W.D. Gann, although I still think a lot of people have no clue what he was on about. I do think there are people that know that. I actually know people that are very good with Gann analysis. But I found over the years that, you know, it's worth figuring these things out for yourself. And then also, when you use cycle analysis, that you can create these sort of forecasts that can forewarn you of potential upcoming highs and lows in markets, which is why I apply cycles and why I'm going to start doing this newsletter, because we've been seeing some extremely good examples in the markets that I've been following where these cycles have been working beautifully. But that being said, if you create a forecast using cycles, and if sounds all crazy what I'm saying right now and doesn't make any sense, I'll be showing you right now. I just want to get this first thing out of the way. It's like you never trade a cycle forecast on its own. You always need a confirmation technique that a market might be respecting a cycle turning point. And that analysis technique, in my opinion, the best one you can get that complements cycle analysis is market geometry, which is why also I'm going to start incorporating the cycles. All these things with the dollar index, these sort of projections when I say towards India, all that might sound crazy, but I've actually done cycle work on this, and it's also influenced by my bias and helping me get in pristine tops and bottoms around about turning points when we see we might have cycles. And this brings me to cycle software that I've been using for a while now. Back in the days when I started with cycle work, I followed a lot of courses on WD-GAN, lost a lot of money, a lot of rubbish out there, and cost me a lot of hard earnings, to be honest. It's sort of like when you delve down a world of WD-GAN, or it could be such murky waters that you can easily get confused and, like I said, go down a rabbit hole. Now, I've done everything back then by hand. It is very possible. I could do market projections for a year in advance, and majority of cases they'll be pretty well done, but they all had to be done with hand. And you had to feed these into very clunky Excel sheets, and it's just stuff that, it just took so much time to do these things properly that I started searching for proper software. Now, there's only, I believe, two people out there like I said, two companies out there where you can actually use cycle software that does all the heavy lifting for you, if I can say it that way. So guys, I'm not going to go too much into cycles, but I just want to show you something here, and hopefully what I'm showing you visually here will make sense for you, and how these cycles can help you to determine potential highs and lows. And I'm going to be doing this on Bitcoin. This can be done on any market. I just really do find that this works extremely well on Bitcoin, probably because it's such an emotional sort of investment, not these old school commodities or Dow Jones and all that sort of stuff. And because also it's a 24/7 market, I just find for some reason that cycles work extremely well on Bitcoin. So that being said, like I said, I'm going to be releasing a newsletter towards the end of this month, beginning next month, the first week, round about there. We're going to be looking at some markets, and my idea is to identify cyclical turning points that you need to be aware of, so that you can make sure that you either exiting a position there, or should consider exiting position. I can't tell you what to do with the markets, but it's actually a tool that's very useful, in my opinion, to forewarn you of what might be coming up next. Now, cycles are really cool because they can, like I said, forewarn you of potential highs and lows. And what they also do, they can help you with direction, which is something that general analysis obviously can't do. Cycle analysis is the only means of analysis that can actually give you a decent projection and also keep you on the right side of the market. All right, so without further ado, I'm using what is called the Cycles app, and it is from the Foundation for the Study of Cycles. You can go search that in Google. I've got full permission to show you guys my own analysis with this, so I'm not doing anything behind their backs. That being said, also very important before I show you this and conclude today's session, is that if you don't know what you're doing and you, let's say, decide to get hold of the software, is that there's a cool saying in cycle analysis, a fool with a tool is still a fool, which basically means that, you know, if you don't know what you're doing, you've got to be really careful. And like I said before, you're not just going to blindly want to trade cycle turning points or upcoming potential peaks and troughs in the market. You need a different analysis method to obviously complement each other to help you actually pinpoint possible reversals. All right, so enough talking about that. What I've got here is a 4-hour chart using the closing prices of Bitcoin. And I've got a starting date set to the 1st of January 2017. Now, what this cycle analysis tool does, or what they call the cycle model builder, is that it extracts the dominant cycles prevalent in a market. And what that basically means in layman's terms are that you'll quite often find that there are certain lengths or time between peaks, highs and lows in markets that repeat over and over and over again. And the thinking is if they do that in the past, then they're more likely to do that in the future again. So basically, the future is repetitive of what the past has done, price-wise, obviously, in our case, being traders. Now, that might sound very crazy, but where the problem comes in is in cycle analysis that there can be many cycles that are prevalent in markets. Some of them have a long wavelength, some will have a shorter one, which is why we have a cycle model builder, and the software basically goes and identifies using this data set that I've drawn in here. And this was analysis that I've done to track the Bitcoin, and I've ended this analysis on the 20th of August, and I identified 5 different dominant cycles. And if you were to then what we call incorporate all those cycles, so there would be 5 different cycles of different wavelengths running in this market. But if you incorporate them using this software, it's only possible with software, and create what we call a simulation wave. So a wave that's created by incorporating all those 5 cycles in this case, then you'll see that we've seen pretty remarkable results here. These, what we call peaks and troughs align pretty well with highs and lows in the market. Whenever you see some sort of sideways movement like this, it generally sort of shows a corrective or sideways moving market. That being said, when you're dealing with the market, especially like Bitcoin, the tops are quite often more accurate at catching highs than lows because of just how fast Bitcoin is in its nature. The declines can be extremely aggressive and extremely sharp. So you can find that your cycles will not catch the exact lows and highs during a decline, for example. That being said, this is a good example again of why we need market geometry to see if a cycle is going to be hitting before or after cycle peak or trough. Now, like I mentioned, this is analysis that I've done and ended by drawing in my own, uploading my own 4-hour chart data and then creating a projection into the future. Hopefully this is all making sense for you guys, but like I said before, especially with these highs, they're extremely well to catch highs. So now what we've had here was a high, and I normally take a day or 3 days between the 16th of August to, let's say, the 18th of August. Then into a low around the 27th of August, 26, let's call it 28. And then into a high around about the 6th till 9th or 6th till the 8th sort of September, and then a decline into the end of September. So this is analysis done before the time, and just remember these dates that I gave you here. This is why I brought up Bitcoin as well. So the previous high, or sort of high, this one over here, gave us a little downturn here. Let me just go back. This sort of low here gave us this low here. And this high over here, like I said, give or take a few days above, before and after, nailed, I would say very accurately, the high before the strong decline at the moment. So in my opinion, very, very cool stuff to work with, and especially, like I mentioned, to use as a tool to forewarn you of potential highs and lows in the market. Now, that being said, I believe cycles are not static in nature, but they are dynamic in nature, meaning that you continuously need to optimize your program, the software that you use, to make sure that, as some cycle experts would call you, you can get cycles that appear and disappear, which is why we want to continuously update the cycles going into the future. But if we just have to work with what we're seeing during this current decline, and this is how those cycles worked out. This is actually up until today. So that was the one I ended in August, and this is the one we're dealing with right now. Shows a potential low into the 28th of September, give or take, guys, and that's what I superimposed on the chart over here. And before I finish off, I'm going to just quickly show you some market geometry that complements this actual move to the downside. So guys, another thing is here, this doesn't mean that we have an impulse move to the upside, that price is actually going to break above previous lows. We're more interested in these dates than actually dates and direction, obviously, than we are in obviously how high a range is going to go or how low a market might go. This is exactly why we want to use market geometry. I've actually hidden a lot of my market geometry on here. Let's start with that parallel channel here. I think this was the dominant parallel channel to the upside. If you run a line parallel with these ones, you'll get this highs and those highs. You get these lows and those lows. Price failed to break at that cycle turning point. This one over here that we've foreseen ahead of time at the center line of that channel, and the price moved lower. You'll also see that if we copy and paste this channel, that it's still working. Price reached the low side of it, bounced higher, failed to again break above the center line. It did over here, came down, pulled back to it, and we have seen the next move to the downside. Now I've got a lot of geometry on here. I just want to get rid of this for now. Okay. Let's bring in the pitchfork. This for me is a pitchfork working at the moment. It is a standard pitchfork using these three anchor points prior to this decline. I'm viewing from an Elliott wave perspective. That is a potential first wave high with an ABC moving lower now. Potentially, guys. And then up. Maybe to new highs. The main thing I have to say here is, though, that although we're saying on the 28th or so September, we'll obviously have to watch this, is that, again, dealing with the nature of Bitcoin, these strong declines can often materialize before a cycle turning point, like in this case over here. So the cycle caught it late in this case. We might be seeing that again, but it'd be very interesting to see. And this, what I superimposed on the chart here, incorporates that end of this month sort of cycle low here. And this is how you tie everything together with market geometry. And this comes back to that one question, who sent me that about A or C wave equaling the A wave. Who was that again? I'm sorry, guys, I'm forgetting your name already. Buwan. If this was an A wave drop, you'll see that I used the fib extension from that high to this low to this lower high over here. Then if this is a C wave, it has not even reached the 100% or the same range as this A wave. So I'm thinking we could definitely be seeing, well, I won't say definitely, that's the wrong word to use, an ABC. That might be incomplete. And if it all comes into this range over here, we also have a 0.618 FIP retracement from this impulse that started in July to this recent high. We're finding support. We previously found some support at 0.382. We're bouncing around now at the 0.5. We've just perfectly reached the low red warning line of this pitchfork. We might go up a little bit, and if we get a slow downward move into 0.618, then around about this time frame I'll be looking for going long. And that's how I incorporate it. So basically using cycle analysis as a sort of a forecast for directional moves, and we might have impeding highs and lows form in the market. And I hope you guys can see that by what I've done in August pretty much ring true to catch this recent high before a decline happened. Clearly showing that we're going to see a move to the downside, and that did happen. And that's all I want to show you guys on the cycle stuff and what I've got on Bitcoin. If this is sort of something you guys are interested in, want to see more of, then please let me know. We can definitely start showing you a little bit more of this, but I put an extreme amount of work into this. So we're definitely going to be releasing a newsletter pretty soon, so stay tuned for that on updates when that will be released. We're still thinking about the exact format or the markets that we really want to include. It doesn't help I include markets of people from some of the, how can I say, markets that people are not really interested in. So maybe this is a good chance for, if you're interested in seeing more of these cycle works, that you guys can just please in the comment section there blast some proposals of markets that you would like to see. And if we do see that there's quite a few of the same markets that you guys are interested in, then that will likely be included in that newsletter that I'm going to be releasing soon. Right guys, I had to really rush into the cycle work. I can really talk about cycles for hours and hours, probably even days and days and days, and how they are calculated, etc., etc. But if you know what you're doing with cycles, they can be very useful in helping you figure out where potential highs and lows the markets might be, as well as those time frames, which is something that trading really lacks, the current means of analysis. That being said, we've already reached the low red warning line. We've not reached the 100%. So I would really like to see price gravitate lower, potentially into this area. If it does break lower here, then the last place for this to turn higher, in my opinion, is at the 0.786. But what is interesting, if we do enter this time frame, by that time we'll decide if it's this zone or this zone for a buying opportunity. Okay, actually went on 48 minutes today. All right, so guys, hopefully you enjoyed what you've seen here today. I'm gonna call it quits from here on unless there's more questions. Again guys, if you're interested in the cycle stuff, let me know. If you're watching this recording after this live session, you're interested in cycles, and you know you want to see some of these cycle work apply to markets that you like to follow, just pop that into the comment section, and you know it'll be great help to kind of gauge what it is that traders actually want to see these days, and not just follow the old school crude oil or some markets that guys might not be interested in anymore. So you really want to keep with the times and you know release useful information that the majority of traders can you know find useful. All right, I think that's it. Nathan, any questions there? If not, then I'll call it quits for today, and I'll be back next week again. Cool. Perfect, guys. No more questions. Thanks very much. I hope you all have a fantastic rest of your weekend, and I'll be back next week again with another live session. Until next time, all the best that side, and goodbye.